Hi there, good morning. You're watching Market Cafe on ET Now with me, Snehisha, and with me is Shreyansi Singh. Let's kickstart the show by talking about what happened last evening. All the news was around this and all eyes were on India versus Australia as they took on at Ahmedabad yesterday, the World Cup final, which, well, unfortunately ended India's winning streak and dream for the World Cup. Australia clinched their 6th ICC World Cup by 6 wickets yesterday. Australia's Travis Head hit 100 in the World Cup final against India. In fact, he went on to hit 137. Australia captain Pat Cummins won the toss, chose to bowl first, and I personally feel that's where we lost a little bit of the match in the beginning, but India captain Rohit Sharma said that we would have batted first anyway. So while Rohit got off to a rocket start as usual, he got out at 47, his most risky number to get out at. He's consistently been getting out at 47. He had you also had Shubman Gill. He had fantastic records across the format, but yesterday he fell early to Mitchell Starc. Shreyas Iyer also ended his innings in single digits. You had key Indian batsmen who were not able to perform yesterday, did not put up as much as they should have on the board, did not give India bowlers enough time to bowl out the Australian counterparts. Now, Australia were wobbling at 47 for 3 in pursuit of a target of 241. Remember, we were unbeaten throughout the entire tournament. Left-handed opener Travis Head, now he's the one to talk about, right? Because he is the one who single-handedly steered Australia to victory. He hit a century in 95 balls, went on to hit 137, and what's heartbreaking is his catch was dropped on the first ball itself. Imagine, Shreyansi, had they caught that catch, the entire course of the game, the entire history of how many World Cup which nations has won, everything would have changed had that one key catch been caught. But unfortunately, they dropped that catch and Travis Head went on to play 137. And key batsman Virat Kohli made 54 after Indian captain Rohit Sharma struck a fluent 47 of just 31 balls opening the innings. We could say we had a strong start. We fell a little bit earlier when it comes to the wickets. We went on to play the best we could. The pitch was not in favour in the first half. We ideally should have been able to bowl first, but well, the dew, the pitch at Ahmedabad, the location and all of that was in favour of Australia. And well, Shreyansi, not our day, not our evening, not our year and not our World Cup this time. But next time we can hope for, for the World Cup. Yes. Fingers crossed for next time.
Well, Monday blues are definitely hitting me harder, I don't know about you, after yesterday's match. But well, let's take a look at what the US markets did and how they fared on Friday. The S&P 500 rose on Friday and clinched a third straight winning week amid a red-hot November rally. Now, when you look at the major indices, they each notched their third straight positive week. The S&P 500 added 2.2%. You had the Nasdaq jumping about 2.4% as well. And the Dow also closed the week with a 1.9% advance. Now, this is the first 3-week win streak for the Dow and S&P 500 since July and the first since June for the Nasdaq. Well, those gains were sparked by tame US inflation data that gave hope to investors that the Federal Reserve's tough stance on rate policy may be in the rearview mirror at this point. And this is a truncated week, of course, for the US markets on account of that Thanksgiving holiday. But let's see if the US markets are able to keep up that momentum really. The yield on the benchmark US 10-year Treasury also hit its lowest level in about 2 months. And when you look at the Pan-European Stock 600 index, that also closed around 1% higher with all sectors and major bosses in the positive territory. So the gains were led by financial services and mining stocks, but all in all, a very strong handover coming in from the US and European markets at this point.
Absolutely. So that's the roundup on the markets globally. But let's also talk about oil then, and let's take stock of what happened because oil prices rose on Friday, a day after they sunk 5% to 4-month lows on growing worries about burgeoning non-OPEC supply as well as cooling demand. On Friday, you had WTI closing at 75 and you had Brent that had just nominally crossed that $80 per barrel mark. And both benchmarks have lost around a sixth of their value over the last 4 weeks. Prices are on track for their 4th straight week of losses. Well, this was as of last week, so let's see what oil does this week as well. And oil's decline last week was mainly triggered by a steep rise in US crude inventories and production sustaining at record levels, while signs of thawing demand in China also triggered concerns. So while that was a roundup on oil. Brent has managed to cross that $80 per barrel mark again. Let's see how this week pans out for oil as well, Shansi.
Absolutely. And demand concerns from China have been in the center of all of the action in the oil markets since it's the top importer. But let's take a look at the events to look out for. Now, when you look at global cues, you've got the November 21 FOMC minutes. And on November 22, you do have the initial jobless claims and S&P Global Manufacturing and Services data on November 24th, followed by composite PMI or the Black Friday. Now, in terms of data coming in from the UK, you do have UK S&P Global data coming in. And on November 23, there's the SIPS Manufacturing Composite PMI. But from the Eurozone, you have the consumer confidence early in the week on November 22nd. And on 23rd, you have S&P Global Manufacturing and Services PMI. Well, in terms of corporate action, there's a whole host of things that are happening. So you have a lot of companies that are mulling fundraise, the likes of Rate Gain Travel, Saturn Credit Care. So those counters will be in focus, and so will other counters on account of lock-in period opening. So Keynes Tech, Gland Pharma, VS Supply Chain, all of these counters would definitely remain in focus on account of that lock-in period opening.
Absolutely, and let's also look at some other news that we've been tracking for you globally, and somber news continues to come from Gaza because at least 13,000 Palestinians have been killed and 30,000 have been wounded in Gaza since Israel launched its offensive, of which 5,500 are children and 3,500 were women. Israel, meanwhile, has stepped up accusations of Hamas abuses at Gaza Strip's biggest hospital, saying a captive soldier had been executed and 2 foreign hostages held at a site that has been a focus of its devastating 6-week-old offensive. Al-Shifa Hospital, which is the biggest hospital in the Gaza Strip, which was a shelter to thousands, has been evacuating staff and patients since Israeli troops swept in, looking for 240 people that Hamas kidnapped after the 7th October cross-border assault that sparked the ongoing war. 31 premature born babies have been evacuated from the Al-Shifa hospital and taken to the European and Nasser hospitals in the south. A deal on captives, however, has not been reached. There was some speculation that a ceasefire has been reached, but neither of the parties have confirmed it. So, well, that's still speculation.
Well, Apple will pause all its advertising on X, formerly Twitter, 2 days after owner Elon Musk tweeted his enthusiastic agreement with an anti-Semitic post. A cascade of other major technology and media companies from IBM to Disney made similar announcements.
And former OpenAI chief Sam Altman, who was just ousted by the company, could be mulling a possible return. Reports also suggest that he could be launching a new AI venture. A day after the board fired him in a surprise move that rocked the tech world, Altman was talking to company executives about improving governance structures.
Retail giant Amazon announced a fresh round of layoffs at its voice assistant unit Alexa, citing business priorities and greater focus on generative AI. The cuts affect several hundred employees working in Alexa. Remember, the company has been pulling back in a variety of divisions this month, including in its music and gaming divisions and some human resources roles.
Staying with Amazon then, Amazon is targeting merchandise exports worth $20 billion from India by 2025 by adding thousands of small sellers to its e-commerce platform. Bhupen Wakankar, who's the Director Global Trade at Amazon, said, "We are very encouraged by the number of entrepreneurs who signed up this year. They're looking to scale up as well." Now, there was a huge demand for made-in-India organic health supplements, homeware like bath towels, jute rugs and robotic game for children ahead of the Black Friday Cyber Monday sale, which is an 11-day shopping period that begins from Friday.
Well, with this, we're timed out on this segment. We'll see you on the other side.
Hi there, welcome back. You're still watching Market Cafe on ET Now. Now, the big news that we had over the weekend was the approval of the PLI 2.0 scheme, and of the 32 electronic manufacturers that had applied for it, 27 had received approval for the second leg of the production-linked incentive for IT hardware. Electronics and IT Minister Ashwini Vaishnav said that the move is set to inject 3,000 crore rupees worth of investment into the sector. Let's listen in to what he had to say.
A few months back, Honorable Prime Minister had approved the PLI scheme for IT hardware. And within the very short time frame, I am very happy to announce that 27 companies have been approved for the PLI IT hardware. The best part is almost 95% of these, which is I can give you the exact number actually, 23 out of these are ready to start their manufacturing on day 0. And about 4 companies will start their production within next 90 days. So it's a very good preparation. I am very happy that the industry is moving at the pace at which our Prime Minister Modi ji wants the country to move. These 27 applications will lead to about investment of 3,000 crore rupees, additional production of about 3,50,000 crore, and direct employment of about 50,000, indirect employment of about 1,50,000. So total employment about 2 lakh will be created using this scheme and the production. Best thing is the value chain is shifting to India. That's the most important thing. Consistently, there is a movement of people who want to manufacture parts, components, sub-assemblies. They are all moving towards our country. And this creates a very good base for the next big level of electronics manufacturing. Already we are at about $115 billion, and we are moving rapidly towards $300 billion in the coming few years.
Well, let's also go across to my colleague Sumita Karir, who's standing by with more details.
Right, so the government has granted approval to 27 companies for its PLI scheme for IT hardware that involves servers, tablets and PC manufacturing. This includes major players which have been granted approval include Dell, HP, Foxconn, VVDN amongst others like Goodworth Electronics, Sirma SGS Technology, Bhagwati Products Limited, NetWeb Technologies amongst others. Making that very, very crucial announcement, Union Minister for Railways, IT and Telecom, Minister Ashwini Vaishnav said that out of these 23 companies are ready to start manufacturing on day 1. 4 companies will start their production in the next 90 days. This obviously reflects a shift in the movement of value chains to India, he said. But exactly how much of an investment is coming in as a result? Well, a total of 300 crores, including additional production of 3,50,000 crore. There's also going to be employment of about 2 lakhs. There's going to be direct and indirect element to that as well. Remember, the PLI scheme for IT hardware was notified in May 2023 with a budgetary outlay of 17,000 crores with an aim to boost manufacturing in the country, to reduce dependency on imports from other countries, and of course to integrate India into the global supply chains. Minister Vaishnav also said that India is fast moving towards the goal of achieving the $300 billion goal in electronics manufacturing by 2025-26. It already is the second largest mobile manufacturer in the world now, he said. Remember, this development is coming in. It aligns with India's proactive strategy to attract IT hardware companies, to position and enable India to become a leading global hub of manufacturing. The latest announcement definitely hence comes as a shot in the arm for the government to reach that goal.
All right, Sumita, thanks for all of those details. Now, on the back of this news flow, Dixon Tech will be in focus today because its subsidiary Padgett Electronics was also on the list of companies that were approved for this IT PLI 2.0. Now, we managed to catch up with the management of the company to understand the revenue synergies and the road ahead for the business. Listen in to what Saurabh Gupta, the CFO at Dixon Tech, had to say.
We think it's a large opportunity for companies like us, and we will capture a large opportunity of this overall pie. We had applied under the hybrid category with a commitment of 250 crores of capex and almost 48,000 crores of cumulative revenue over a period of 6 years, starting next financial year. We're already manufacturing for one large brand and is in discussion with another large brand, and hopefully we should be able to conclude with them in the next few months.
So we'll definitely be keeping an eye on Dixon Tech on the back of that, but the Reserve Bank of India has given its nod to the resolution plan for the troubled financial services firm Reliance Capital, paving the way for the acquisition by Hinduja Group-led IIHL. Ankur Mishra is standing by with more details. Ankur, help us put this into perspective.
Yes, banking regulator Reserve Bank of India has given approval to the resolution plan of acquiring Reliance Capital. Remember, IIHL, that is the parent holding of Hinduja's, had submitted a plan for acquiring Reliance Capital, and that has now got no objection letter from Reserve Bank of India, meaning the regulator has given its go ahead. Now, apart from that, this deal also needs approval of other regulators, including SEBI, IRDAI, among others, but it is a major step in the resolution of Reliance Capital, as IIHL had submitted a resolution plan of over rupees 10,200 crore, which involves a cash upfront of over rupees 9,600 crore. It will be a good news for lenders if the resolution is approved very soon, because they will be able to write back this amount in this current financial year.
All right, Ankur, thanks for all of those details. Now, an IPO from the Tata Group after nearly 20 years is hitting these streets soon. Now, you've got Tata Technologies that will be opening for subscription on the 22nd of November, which is day after tomorrow. My colleague Anurag Joshi spoke with Savita Balachandran, who's the CFO at Tata Tech, about the company's business verticals, scope of expansion, as well as the growth guidance going ahead. So, listen in to a slice of that chat that they had.
Our margins have grown by nearly 400 basis points in the last 3.5 years, from 16.2% in fiscal 21, which was a pandemic impacted year. And as you rightly said, we reported 18.4% of EBITDA margin in the 6 months for fiscal 24. And the improvement has been enabled certainly by growth. We've clocked a cumulative average growth of close to 35% in the 3 year between fiscal 21 and 23, and that healthy pace has continued into the first half of this year as well. And we are continuing to look at improving the efficiencies within our operations in various areas, and levers for them would include looking at the onshore-offshore mix. Today our revenues are at about 50-50 between onshore and offshore, and we believe there is headroom to look at improving that further. We're also looking at improving our unit cost of delivery, hence people pyramid optimization is an area of focus for us. And needless to mention, we will look at productivity measures, automation as a way of improving margins. And pricing is an everyday block and tackle activity within the business. So all of these levers in combination, we hope we'll be able to deliver margins that are in line or better than the industry.
Tata Technologies is sitting on cash of about 1,000 crore. How are you planning to utilize that cash, and would that cash support inorganic growth plans in the future if the company has any?
You would have noticed from the offer document that except for the pandemic impacted year, the company has maintained consistency in returning cash to shareholders, both in fiscal 22 in the means of a buyback and in fiscal 23 through dividend that has been declared. Going ahead as well, I think the board will recommend to our shareholders the best way to utilize the cash, keeping in mind the principles of what the company would require to enable its growth both organically and inorganically, as well as consistency as far as shareholder returns are concerned.
Tata Motors and JLR have been your key clients so far. And you have been working with Airbus, and you've been adding global clients. Going ahead, do you see the global business, the share of global business rising in the books of Tata Technologies? You have more diversified set of clients coming in?
From being almost a single client company many decades ago, I think today we've grown our business to become a global business with many of the top R&D players being part of our client roster. Our anchor business today from Tata Motors and Jaguar Land Rover constitutes about 33% of our revenues. The rest of it is actually business that comes outside the anchor accounts. And that's an area that we are continuing to focus on. While we will look at deepening our engagements with almost all of our existing customers, we are also working at with the new R&D companies who are top R&D spenders to add new logos to our client roster.
Well, Tata Tech will definitely be in focus later this week, but let's look at the Jampack lineup that we have for the market. And we've got, at 8:30, we've got Sanjay Lodha, who's the CMD at Tata Technologies. And at 9:20, we have Ajay Srivastav from Dimensions Corporate to talk to us about the markets and more. RBI's tightening lending norms, and for that conversation, we're talking to Vishal Goyal of UBS Securities. After that, to discuss premiumization trends, we'd be in conversation with Rajiv Samant of Sula Vineyards at 9:40. Now, in terms of road ahead for the business, we do have the company management from IEX, Rohit Bajaj, to talk to us about the roadmap for business. In terms of Q2 earnings, we'll be speaking to the management at GRSE, CMD, PR Hari, and that conversation is at 10 a.m. After that, we'll also be talking to K. Paul Thomas of ESAF SFB to talk to us about their earnings at 10:20. So jam-packed lineup there for the market.
Well, lots of important market experts and managements to look out for today. But let's talk about a company that will be in focus, and that's going to be Pharma Major Cipla, because the company's Pithampur unit has received a warning letter from the US FDA. Let's go across to my colleague Somit to understand the impact of what this could mean going forward. Somit, take it away.
Well, if you see, Cipla's Indore unit or the Pithampur unit has received the warning letter from the US FDA. Now, this unit was inspected by the US FDA in Feb 2023. That time it had received around 8 observations, and the OAI status for this unit was given back in August 2023. Now, what does OAI mean? It means that the facility is considered to be in an unacceptable state of compliance, and the warning letter that has been given is, if you see, is just a formal communication of this dissatisfactory compliance of this Indore unit or the Pithampur unit of Cipla. Now, warning letter does not mean that there won't be an import, that there will be an import alert going forward. So, there is no surety of an import alert, but there could be an import alert going forward. Now, apart from that, if you see, even in case of warning letter, current sales from the unit continues. So, there won't be any impact on the current sales of Cipla going forward. Now, Cipla post this, Cipla's 2 major plants, that is the Goa and the Indore plant, are currently non-compliant with the US FDA guidance. Now, what does this warning letter mean? Now, this warning letter is likely to delay approvals for its key respiratory filings, including Advair and Albuterol going forward. Now, Advair is a key respiratory drug originally filed from the Indore unit, but it is currently under process of being transferred to another Cipla unit which is compliant with US FDA. Now, analysts did not factor any major revenue coming in from this key drug for FY24 and FY25. Analysts expected Advair to get approval earliest by the end of FY25. So, if you see, they had Jefferies had factored only 20 million of sales for this product for FY25 and around 80 million of sales from this product in FY26. But given the fact that now there is a warning letter also, resolve the issue might take some time to resolve. So, analysts expect that approval can be delayed beyond 24 months also going forward. So, that could be one of the key overhang now on Cipla. Also, analysts are expecting there could be further market share losses when it comes to Albuterol going forward because of this warning letter that US FDA has given for Cipla's Indore plant as well now.
Well, absolutely. So Cipla will definitely be in focus and we'll keep an eye on that one. But with this, we're timed out on this segment. See you on the other side.
Hi there, welcome back. Still tuned into Market Cafe. This is ET Now. Now, when we talk about where the market closed on Friday, we did manage to close above this 19,700 levels at 7:31. So, I'm joined by Ansh now in the studio. And Ansh, tell us what the market setup looks like today and what's the FNO snapshot for the day.
Right. So, as we can see in the picture, let's get the chart on the screen. Nifty faces strong resistance at around 19,850 level for the second session. Also, if you'll see, index was drawn by merely 0.2%, but Nifty Bank was drawn by 1.3% because RBI increased risk weight on banks and NBFCs. Now, let's see what happened in FNO segment. Long unwinding was seen in Nifty futures with open interest declining by 2.7%, indicating a bit negative stance here. Whereas on option front, we saw strong call writing at 19,800, indicating traders expecting Nifty to take resistance around this level. Now let's shift our focus to what FIS did. In index futures, they covered 5,100 long contracts. They added 4,200 short contracts. So net to net, we are seeing a net addition of 9,300 contracts on downside, which shows their bearish stance. Because of which FI total long, which was inching higher, that got snapped and it is down from 23% to 21%. So in a nutshell, data shows a cautious signals. For Nifty to gain momentum on upside, it needs two things. One, a decisive breakout from this 19,850-900 level, and second, support from Bank Nifty.
Well, absolutely. So that's the futures and options roundup coming in. But there's a host of stocks that would likely to be buzzing in trade and are in focus on account of news flow, the likes of Kalyan Jewellers, Aurobindo Pharma. What is the list that you're looking at?
Right, so Oberoi Realty will be the first stock in focus for today's trading session, as the company is set to acquire 14-acre land in Gurugram for around 597 crore, making it entry into NCR region. The focus will be developing on a luxury project here, covering 2.6 million square feet of developable area. Apart from this, Kalyan Jewellers will also be in focus, as company has acquired the remaining 30% stake in Kalyan Oman, making it as a wholly owned subsidiary of the company. Aurobindo Pharma will also be in focus, as US FDA had conducted inspection at company's manufacturing facility, in the result of which they got zero observations. So this is a positive sign for the stock. Elecon Engineering will also be in focus, as company has incorporated Elecon Radicon Africa, a wholly owned subsidiary in South Africa. This subsidiary will focus on sales, marketing and servicing of industrial engineering product in that region. Dalmia Bharat Sugar is also in focus, as company has said to the exchanges that the operation at that Kolhapur and Ninavid Devi unit of the company unit in Maharashtra are disrupted due to farmer agitation. Bajaj Finance is also in focus, as the company has temporarily suspended the issuance of EMI cards to new customers. Lastly, Cipla will be in focus, as company has executed a facility demand guarantee of 945 million in favor of First Rand Bank of South Africa. This is for extending general banking facility to Metro Pharma, a step-down wholly owned subsidiary of Cipla in South Africa. So keep an eye on the stocks.
Well, absolutely, Ansh. So we'll be keeping an eye on all of those counters. Moving on then, e-commerce and online fashion platforms are witnessing growth. And what are the factors that are contributing to this surge in business performance? Winnie answers that question and helps us understand what are the October internet trends.
Absolutely. So interesting trends that have come out in the month of October. Let's not forget, a bit of festive season that came in the month of October as well. We saw a lot of festivities. So in terms of the October trend, yes, October trends saw in terms of internet, they saw good growth of around, especially on the Android traffic, that grew by around 28% versus the 3-month average, that was 15%. So clear trend in the month of October indicates that, festive season is something that is supporting the growth. This is for Android traffic that we're seeing in terms of the internet trends that have come in there. Now, obviously, in terms of where we saw the strength coming in, Flipkart, Meesho, Nykaa Fashions, they saw good growth versus the last month as well. While in terms of the laggard, we did have Myntra and Ajio, which saw a bit of a subdued performance versus the last month. When you look at it, especially in terms of the traffic growth that has come in, let's look at it on the screens coming in as well. In the month of September, look at Flipkart. We're seeing a bit of a negative growth. In October, you're seeing positive, strong growth there. Meesho, similar trends there, stronger growth than the previous month as well. Nykaa Fashions, a bit of an improvement on that front. Myntra too, seeing an improvement. So let's keep an eye out, on these trends. What did not do or what was flattish was something like when you look at it in terms of Zomato. 13% growth was last September, I beg your pardon, was in September, that is last month. While in terms of October, we saw 12% growth as well. Big Basket, side bit of a growth on that front. JioMart, a bit of a subdued performance came in on that front as well. So that's how the trend shaped up for these apps mainly coming in there. While in terms of obviously the daily active users for Tira Beauty, that saw a really good increase, and now that is actually at more than 20 times almost of Nykaa's daily active users as well. Other than that, in terms of Nykaa, growth over there was also quite good versus September. Blinkit, Zomato, that too saw a bit of a good growth as well. Blinkit especially, Zomato a bit subdued in trade as well. So let's keep an eye out on that. This were the Android traffic trends that we saw coming in for the internet side.
All right, Winnie, very interesting data you've compiled for us over there. So thanks for that roundup. But I'm coming back to you because Jefferies has taken a bullish stance on the new kid on the block, that is Honasa Consumer. So Winnie, tell us what's fueling this bullishness and what are they saying for Honasa?
Absolutely. So, obviously Honasa, like you mentioned, is the newly listed company as well. Now, in terms of they're maintaining a buy, they're giving a target price of 520 rupees per share for Honasa. They believe that investors have appreciated Honasa's track record, and debt is something that is around one factor that they're keeping an eye out on. Other than that, margins, competition, offline channels, that's what the investors are keeping an eye out on. Other than that, in terms of the FMCG incumbents are probably trying to tilt more towards the profitability growth. They see Honasa growth priority as a positive sign that is coming in from the company. Margins, they believe, should converge with the peers over the longer period of time. Obviously, right now we're seeing those high margins, but that is, because of the current scenario. But for them, over a longer period of time, those margins will at some point of time be the similar levels as we are seeing for the peers as well. They also said that management must go ahead with its growth agenda. That would work out well for Honasa, and they are betting on that strategy of growth that Honasa is focusing on. They expect investors to be patient with Honasa even going forward as well, so they don't see much of a worry coming in on the investor side as well. Other than that, in terms of the numbers that will be expected, obviously recently listed, now the numbers will be coming out on 22nd of November. What Jefferies is expecting in terms of the numbers from the company, they're forecasting a 20% growth on a year-on-year basis in Q2 for the company. Improvement in margins also on a quarter-on-quarter basis is what they're expecting overall. So let's keep an eye out on that. Interesting numbers that is expected from Honasa on 22nd of November as well.
Well, absolutely, Winnie. So we'll definitely be keeping an eye on Honasa Consumer. But another counter that will be in focus is NMDC. Now, Citi has maintained its bullish stance over NMDC, and they've in fact hiked their prices. Let's go across to Lisa Fernandez, who's standing by with more details. Lisa?
Right. So Citi's commodities team, they have come out with a report on NMDC's iron ore prices, the near-term outlook for iron ore prices. Now, according to them, they say that the near-term iron ore prices that can stand at around $120 per ton, and they have an upside potential to reach $130 per ton. And this is basis the policy initiatives as well as the supply disruptions which may arise from the strike operations at the BHP operations. So Citi's team thinks that NMDC's fine prices, that is at 20% discount to the export parity prices, and so it has a headroom to rise by around 1,000 rupees per ton. But the price rise may not be as significant and maybe lesser the actual price increase, because the domestic steel prices as compared to the export prices, they have a downside risk. And also management is quite non-committal about the price trends going forward. While the global prices that has been resilient, the domestic prices has been a dampener till now. And talking about the valuations that they have given for NMDC, they have reiterated buy on NMDC, and according to them, it's trading at 3.8 times EV EBITDA multiple on FY25 earnings, which is quite attractive, because considering the global peers, that is trading at around 4.5 to 5 times multiple. And also NMDC has an FCF yield of around 8.5 times. So this valuation is taken on implied iron ore prices of around $115 per ton at a spot of $130 per ton. So this is Citi's bullish stance coming in on NMDC, and NMDC will be in focus today on the back of this report.
Thanks for that. NMDC will be in focus on the back of that. Now, another stock that will be in focus on the back of a brokerage note is Paytm, and we've got a note from Bank of America. Now, this note says that BofA has maintained a buy rating on Paytm with a target of 101,165 rupees per share. They see risk to the loan growth slowdown, but they're saying that the overall impact of this loan growth slowdown will be limited. Now, they're seeing impact from this on the personal loan segment, but they say that there will be no impact of this slowdown on the merchant as well as the BNPL segment, which is the buy now, pay later segment. They're maintaining a buy on a favorable risk reward is what they're saying. They find Paytm to be competitively well placed, and they're saying that any better than expected growth will be a positive for markets. Markets will take that well, and they're also saying that more partners that will be signing up will be a key positive for the stock going ahead as well. So that's the note coming in from BofA Securities, maintaining a buy on Paytm with a target of 1,165 rupees.
Well, absolutely, Snehi. So Paytm would definitely remain in focus, and we'll keep an eye on that one. But with this, we're timed out on this segment. From me, Shreyansi Singh, my co-host Snehi Shah, and the entire team who put this show together, thank you so much for watching.